Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, April 27, 2009. The euro-dollar pair, after rising 400 pips in the latter half of last week, met resistance at the 1.33 level and fell in today's trading. The pair touched a level around 1.30 as a risk aversion came back into the markets as a result of the outbreak of a swine flu epidemic in Mexico and in other countries. The news hurt equities around the world, boosting the fortunes of the greenback and the yen overnight. In fundamental news from the Eurozone, Germany's consumer confidence, as measured by GfK, registered a reading of 2.5 for the second straight month in May. That news surprised forecasts of a decrease, as lower inflation, lower energy prices, and higher pensions helped lift purchasing power and consumers' moods. German import prices fell more than expected, a sign that inflation will continue to be under wraps. Import prices were down 0.4% on the month in March, which put the annual rate at negative 7.1%, the highest price decline since April of 1987. The euro-yen pair, which had formed a labored upward sloping channel last week, broke down below the channel support line to fall to an intraday low of 125.70. Today's downward move amounted to about 240 pips. The 126 to 127 zone has acted as key support in late March and early last week, so it will be interesting to note how risk sentiment behaves the rest of the week in order to see which direction this pair will go. The pound dollar, which hit a high of 1.48 on Friday, fell to 1.4515 in overnight trading as risk aversion dominated the Asian session to open this week. However, as European trading got underway, the pair saw a rally that extended once the pair moved above the 1.46 area in New York trading. The New York session saw U.S. stocks rebounding after opening negative, which helped some currencies like the pound rally from their overnight losses. Data from the UK showed housing prices were down 0.3% in April, according to HomeTrack, and were down 10.1% on the year. That annual decline was a slight improvement from March's figure. UK mortgage lending, meanwhile, disappointed forecasts, with the total amount of mortgage approvals down to 26.1 thousand in March from the 28.2 thousand seen in February. Mortgage lending, at £3.7 billion, was marginally weaker than in February. The euro-pound pair saw a rather sharp fall today following Friday's strong rise. The pair fell 120 pips from its intraday high near 0.9050, test the area around 0.89. That was resistance early last week that had switched to support on Thursday, so we're at a key level that should be watched to see where the pair may go next. The US dollar-Canadian dollar pair gyrated with the ebb and flow of risk sentiment in today's trading. First, the pair rose in favor of the greenback as the Asian session brought about risk aversion. The greenback then gave up its gains as it looked like US stocks paired their morning losses. However, U.S. stocks dipped again in the afternoon, giving risk aversion another leg in today's trading and pushing the greenback back to the 1.22 level, which was a new high for the day. The dollar-Swiss franc had an interesting session. After 2 days of strong down moves to end last week, the pair found support at 1.1360. Today's action saw the pair rally 240 pips to the 1.16 level. The move was fairly labored until the greenback pushed above the 115 level between 1 and 2 p.m. Eastern. Looking at the next session's upcoming releases, tonight we have Japan posting its retail sales, while overnight the UK will release a measure of retail sales and Germany posts its data on consumer prices. Tomorrow, the US has 3 releases: the S&P Case-Shiller House Price Index, the Conference Board Index of Consumer Confidence, and the Richmond Fed Manufacturing Index. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.